Welcome to the Daily Drive. Just some real estate notes on what's happening in the market and what to do about it. Today is a very timely and important matter. That is cash calls. What do you do if you're faced with a cash call? Well, let's start with, assume it's a stock. You own $100,000 in stock, in a particular stock, and it goes down to $75,000 in value. What do you do? Well, if you think it's going to keep on going down, you're going to sell and cut your losses. But if you think it's going to go back up, then you're going to hold on to it in the hopes that it goes back up. Because you can afford to ride through it because you already own it. There's no costs associated with it. You don't want to capture a loss. If you were to sell it at 75, you actually capture that loss. Well, if you have a business, you paid $100,000 for a business, and you borrowed $75,000, and the value of that business goes down to $75,000, and you have positive cash flow, again, you can ride through that. However, cash calls are in a position of it's not making money, it's losing money, and we need to put more money into it to save it. So if you have a business that you borrowed $75,000 on, paid $100,000, your equity is gone. And you've got to face that. And if your equity is gone, you've got zero value and you've got negative cash flow, people would say that business is insolvent. It's bankrupt. It's losing money and it's not worth the debt that it has. But real estate's a little bit different. There's intrinsic value. There's a hard asset there. It is still a business, but there's a hard asset there. So let's take a $10 million property that you borrowed $7.5 million on, and the value goes down to $7.5 million. Again, same scenario. If you can afford to ride through it, there's not a negative cash flow, or if there's negative cash flow and you have enough reserves to hold on, then you'd say, yeah, I'm going to go ahead and hold on and ride through this because I see value. Now, it might be a very bad property. You may not see that value of coming back. So if you're in a position of getting a cash call on a property that you don't see the value ever coming back on, then you need to not put any more money into it. You need to hit the reset button. And first off, have the mindset that you lost that money. The money's gone. Have that mindset that money is gone. Because if not, you're going to be emotional about the decision, and you can't make emotional decisions about real estate or investing. So if it's a property that you think the value is going to go down or stay the same or never catch up, don't put any more money into it, and just accept the fact that you might lose that money, and just hope that whoever the sponsor or syndicator or anybody else is, that they'll figure out some solution. But don't throw good money after bad if you feel like that investment's a poor investment. However, if you turn around and think the same thing, say, okay, the value went from 10 million to 7.5. Would I buy that property at $7.5 million? If you would rebuy it at that $7.5 million level, then yes, you're going to want to put more money into it. You think that value is going to go up. You think it's a good asset. So you would actually put more money into it to save that asset because it is a good investment that you would make right now. Again, have the mindset that money is gone, and now look at it as a new purchase. The only other part on that is any new money that comes in needs to take priority over any of the current equity. Because you've got to assume that the current equity is gone. Anybody that puts any money into it now is saving the potential of those other investors that don't put any money in. So because of that, any new money that's coming in needs to have preferential treatment over any current equity, because that current equity is gone. It's got a value of zero. So somebody that's putting new money in needs to be paid back first. So I would say a partner loan or private equity or a preferred return, something that gives them priority, because they're there to save the investment for everybody. If not, then the thought process might be, you know what, I'm just going to let it go, give it back to the bank at $7.5 million, and then rebuy it at $7.5 million, and all that equity is wiped out and gone anyway. So anybody that's putting money in a cash call is saving that investment. So they need to be protected, and they need to get some type of preferred return. But again, have the mindset, don't be emotional, have the mindset that that money is gone, that investment is gone. And now would you reinvest in that property? In stocks, that $100,000 stock that went down to $75,000, you might want to take the strategy of selling it at $75,000, capture that loss, and rebuy it at $75,000. Now, I'm not a stock guy, but that kind of makes sense if you wanted a loss that year. Well, it would be the same thing in real estate. Can you go ahead and rebuy it, sell it to yourself, rebuy it, and have a lower basis in it, but then keep the existing owners as owners? That's another option. But again, number one, first off, take the emotion out of it. Number two, look at that. Is that an investment that you would want to buy now at the new price? You have to assume that that money is gone, have the mindset that that money is gone, and do you want to rebuy that property at that price? If it's a good asset and you say yes, then yes, do it. But make sure that any of those people that put new money in, however that is, with cash call, partner loan, private equity, however it is, that they have priority over the other equity because that other equity is gone. So it's a sad situation. And if you want me to look at any of your properties, I'd be more than willing to go ahead and do that. But it's a rough market, crazy situation that a lot of people find themselves in. And I'll say it one more time. Have the mindset to understand that the current equity is gone if you're in a cash call position. And number two, would you reinvest into that property? Would you buy it now? So, those are the questions to answer. And thank you so much. Have a wonderful day.